Hi, and welcome back to ENTP Life, the place where we discuss real-time, real-world real estate investing. So this video is actually going to be a review of what my experience was like doing a FHA 203k loan program. Now, I actually checked in on a live broadcast talking about first-time mortgages, or actually different types of mortgages, on MG the Mortgage Guy's YouTube channel. So if you're not familiar with MG the Mortgage Guy, I suggest you check it out because he gives you the perspective of the mortgage broker and a lot of good advice about how to go about securing debt for your projects. So while we were in this live broadcast, there were people who were asking about the process of the FHA 203k loan. And since I've done one, I would like to talk to you about that experience. Now, I did my FHA loan back in 2009, and what was really good about that time was there was this newly passed Obama first-time homeowners tax credit. I believe you got $8,000 or $9,000 as a direct tax credit, as a check to you for buying a home if it was your first time. So I was buying a home in Stony Brook, New York, and what I planned on doing was house hacking. I planned on renting out some of the rooms to college students while occupying the house as the owner-occupant. That area really needs housing. The students really don't have an option, and living off campus is usually cheaper for them. So I figured, hey, I could just live in the basement, rent out upstairs, cover my rent and then some, or my mortgage and then some. So that's what I did. Now, I bought that house for $300,000, and it had an after repair value of around $425,000. Okay, and that's important to know because when you're doing the FHA 203k loan, they're going to first assess what is the property currently valued at, and then what is it going to be valued at once you do your renovations. And that, whatever it's going to be valued at is realistically what your renovation budget or your renovations allowance will be, okay? So you can't buy a house that's, $300,000 and it needs $70,000 of repair, but the after repair value is only going to be $325,000. That will disqualify that property for that loan. So you need to have some room between your purchase price and what the perceived value is for that area. Now, you can figure that out on your own very easily. What I suggest you do is, if you're looking for like a distressed home, whether it's an estate sale, an REO, or foreclosure, whatever it is, just map that property on Zillow and then turn on the sold filter on Zillow and just see exactly what properties that are similar to that one have sold like in the past 6 months. So if it's a four bedroom, 2-bathroom home, you want to put the filters on Zillow to say 4 bedrooms plus, 2 bathrooms plus, sold, recently sold. And then you can just filter in the top right corner to newest. Just look back 6 months and see what houses are the most similar to yours and what are they selling for. And then you'll get a sense of, what is the market value today. Make sure you're comparing properties that are recently renovated too. There might be foreclosures in that area that are showing up that are going to drive the price down, but look for properties that are going to be renovated to the standard that you're going to be renovating your home to, okay? So now let's go on to the process. After you've identified your home and you know that it's going to kind of fit the FHA parameters, you want to get pre-approved for your mortgage, all right? A lot of these distressed properties are stating that you need to be a cash buyer or have a rehab loan. And what's really cool is that some of the homes that are foreclosures or bank owned that were insured by one of the federal agencies, they have like a first look period where they're going to rather sell those properties to first-time home buyers than investors like me. So they'll give the regular people or the first-time buyers the first 30-day window so that they can make the purchase before they open it up to investors making offers, which kind of gives you an advantage because when they're going to consider a mortgage offer versus a cash offer, you're always going to get trumped by the cash offer. But by being in that 30-day window allows you to not really compete with as many of the cash offers which the investors are going to beat. So you've identified your property, you got yourself pre-approved. You're going to need that pre-approval letter just to submit your offers. They're going to want to see that you're pre-approved for a certain amount, which is a rehabilitation loan, and the property condition doesn't really matter, okay? So you go around, you make those offers. One of your offers finally hits, you're going to get the house. Congratulations, right? This is where the fun really begins. Because once you have the approval, you're going to have to hire what's called a HUD consultant. Now, this person is like a home appraiser meets inspector. And this home appraiser slash inspector, his responsibility or her responsibility is to really guide you through the process and ensure that the bank is not getting ripped off. So their job is going to be to review your contractor's bids with you, to do the appraisal on the house to make sure that the appraisal is going to be worth, what you're anticipating that it's going to be worth. And then they're going to also be doing each inspection whenever there's going to be a draw. And what a draw is a release of money from your renovations budget, okay? So this guy is going to go to your house based on your draw schedule, see that all the work that you stated that was going to be done was done, and then authorize the release of the money so that your contractor or you can get paid back for the work that was done, okay? So this person's job is to, one, serve the bank and to also serve you to make sure that both parties are safe, so to speak. So once you have that accepted offer, you hire a HUD consultant. I don't remember what it cost me. I feel like the price was under $1,000 because it included the appraisal, which is usually in New York around $400. And then it was a certain amount that was like set aside for each inspection. So I think I did 3 or 4 inspections, and it might have been like 100 to 150 per inspection. So all in all, around $1,000 in fees to the HUD consultant. But you're going to want to verify that with whoever the HUD consultant is that you end up hiring. Also, I believe on the HUD website, you can find the HUD inspectors. And if you're dealing with a really good mortgage broker who is familiar with the area, who's familiar with the program, they might even be able to refer or suggest a HUD consultant in the area to make it sort of easy. My HUD consultant was coming from upstate New York because he's the only guy that really answered me. So it took me a little bit of time to find a HUD consultant, maybe like a week or two, and get him going on his part of the job. Now, when you're dealing with bank-owned properties, the processes move relatively quickly. And to be quite honest, the FHA 203k program is a little slow because the FHA program itself or your traditional financing is pretty slow compared to hard money, right? And any bank-owned property, they give preference to how quickly you can close as well as the likelihood that you will close. So just keep that in mind as well. That's not meant to discourage you or scare you, but the pace is different. Now, when it comes to actually, going through the process, you secured your HUD consultant. You're going to start walking the property with contractors. Now, I did another video. I'll probably insert like one of those links, reference links up top and below for how to find a contractor. But once you found a contractor, you're going to want to walk the property with them just so you can get a very specific bid. Now, there's usually a bid sheet that will be reviewed by the HUD consultant and be the official bid of record. So whoever is giving you this estimate has to be prepared to give you a very detailed bid, like a line by line. Windows are going to cost this much for materials, this much for installation. And they're going to have to give you this really detailed bid sheet. And a lot of contractors aren't quite built for putting together very formal bids like that. And there's another caveat to this where the payments for the work that the contractor is doing is always on the back end. You will not be able to give a deposit. You will not be able to front run the project with the escrowed money that's being set aside for the renovations. Now, what this means is one of two things. You're going to eliminate a large group of contractors who don't have the credit, who don't have the cash flow to support it, that are also going to be priced really well, and really narrow it down to very well capitalized, very well organized contractors. The plus is that they're really well organized and will most likely not give you much of a headache or run off with your money. The downside is that they are going to be substantially more expensive. They're going to have support staff to do bids. They're going to have credit, and they're going to charge you for that. There's going to be a definite difference in pricing, probably 30 to 40% higher than I guess like a starter or smaller time contractor. But that'll be less management for you, less fear, less concerns, but it will increase your renovations price for sure. So when you're hiring your contractor, if you're able to, find a team that you trust, but they don't have the cash flow to float like the first few weeks of a project, or maybe 3 or 4 weeks of construction at a time, you're going to want to make sure that you have enough money to serve as that float, a combination of cash and credit. So get your Home Depot card, get your Lowe's card, make sure your credit cards are clear. That way you could cover materials, and have maybe $15,000 to $20,000 worth of cash on hand just to pay your contractor. You might pay them week by week as they're completing work, kind of going through your checklist of what's been completed, so that it matches what you're going to get in your draw, so you could get reimbursed for that. So you might have to be like the credit for the contractor, and that in itself is a challenge, but it's the way that it has to be done. That's the way that I did it. I used a combination of credit. I spoke to my contractor to let them know that I'll pay them what I can, and maybe I paid him 2 weeks, and the next 2 weeks when I get my draw, he'll get another payment, and then we worked it out, something like that. So once you have the bid all figured out and the terms of how you're going to be paying your contractor figured out, you have the package that needs to be reviewed by the HUD consultant. Now, the HUD consultant is going to go over it line by line, and if he sees anything is kind of like exaggerated, either too high or too low, he's going to question it. Sometimes the contractor might bundle some of the costs into another item. For instance, framing and carpentry work. They might have that number really large, right? But that's going to include all your rough work, maybe some of your demo, or your rough work in installation of new windows or whatever. So your windows labor bid may be really tiny, but your framing labor bid is really large, and you'll be able to explain that to the HUD consultant and say, oh, no, it was just bundled in. If you have a very cooperative contractor who has time on his hands, you might be able to have them both meet and review that bid and say, hey, this is why it is the way that it is. Okay? A tip that I'll give you is make sure that the contractor kind of front loads the work, right? And what I mean by that is, if the renovations are going to be $100,000 in value, items the first draw should be like $50,000, like half of the work, right? Big items, demo, framing, electrical, plumbing, whatever you could kind of bundle into that first payment. Try to squeeze as much of it in there as possible, and maybe overinflate the prices on that side, because that might allow you to free up some money to float the next phase. Okay, so demo is a big item. It's kind of hard to say how much demo should cost, so you could make that expensive. Applying for permits and prep work, increase the cost of that. And then you'll have, after the first draw is completed, you'll have maybe some leftover money to help carry to the next draw. Okay, so it might be $50,000 and then two $25,000 draws, or maybe $50,000, a $35,000, and only a $15,000 for closing. But you're going to want to make sure that you control the money to the contractor, because you don't want to overpay them for the work that they've completed and then they go missing on you, because that actually does happen. It's a sad reality, but it does. But anyway, now that you're through that phase, the bid is in, the HUD consultant would certify all the documents and release that to the loan processing department or the underwriters. Once you have the appraisal done and it fits, you had your contractor bid signed off and cleared, you already scheduled out what your draws are going to be, etc. All the other underwriting documents that are required for finalizing your loan will be requested by the loan officer or loan broker. It's going to be your typical things: pay stubs, statements, the ability to prove that it's going to be paid off. They may request that you get like a renovations special form type of insurance. So, I can't remember if that was requested in my 203k, but it is what's requested in all of my renovation projects. So, you might, when you're getting your insurance for the property, which is also part of the process before going into underwriting, make sure that they specify what type of insurance coverage you should have. All right? Now, once you've closed on the property, this is what you could expect. Your contract is going to start working, right? You've already negotiated what the payment terms are going to be, and now it's just a matter of working in tandem with your contractor to get the final product that you're looking for, and also managing the time for the draws. Whenever you're coming close to a draw, right, call, maybe you're a week away, talk to your contractor, like, how far are we from draw number one? They're going to say, okay, in about 6 days of work, we should be at this point. Once you're about that 5 or 6 day mark, or that 1 week mark, you're going to want to contact your HUD consultant to make sure that you could schedule them to be there to review the work. That HUD consultant is going to come, they're not going to come tomorrow. So imagine that. You're like, all right, we've done 4 weeks worth of work. The bank is going to come and do the draw, and you find out that the consultant can't make it there for 8 days. Your contractor is either going to stop working, right, or be pissed and say, oh man, I've been waiting 4 weeks for this money, and I got to wait another week and a half for this guy to show up, and then maybe another 3 to 4 days for the bank to release the money. There's going to be this gap. So you want to be ahead of the timing where you have the HUD consultant coming in, or you request him to come in, so that when he does come, it times out with when the contractor is finishing up his phase for that draw, and then you're going to want it to kind of also match up with when that contractor expects to be paid. So, maybe 2 week lead time might be best, so that you're a week away from finishing things. The consultant is going to be able to take his pictures and justify the work as being done, and then he has to do like a workup and submit that to the bank for them to release the funds, right? So that's going to be human timing. How prompt is this HUD consultant? Are they working quick? Do they come and do the draw inspection and work it up right away, or are they going to be waiting 3 or 4 days to get it done? Those type of things will create a little bit of tension. Now, all of these things that I'm saying may be eliciting fear in you because of delays and your contractor potentially walking off the job, but these are real things that are going to happen, and I'm trying to give you some tips on how to kind of deal with that or expect it, so you're not kind of rattled at the moment. No matter how complicated it is, you can do it for sure. I did it, and I did this. I was 26 years old, something like that. In 2009. Yeah, I was 26. So, and it was my first project of this scale. It wasn't the first deal that I was involved in, but it was the first full renovation that I was involved in, and I managed it. So, if you're thinking about, can you do this, you absolutely can. It's just really being a little bit ahead, being prepared mentally to be ahead of what's to come next. Watching a video like this lets you know, oh wow, this is the process. So let me plan for that. Let me advise my contractor that this is the way it's going to be. Okay. So now that you've gone through one phase of construction, you've got your consultant to come out, do his draw inspection. He's going to go through the bid sheet, make sure things are done, and then he's going to release the amount that's supposed to be released. The bank gets that release notice, and they'll wire you the funds, or they'll send it to you by check, which of course is more delays. And this is why I say it's pretty crucial to have your own float money, because it made more sense for me to float the project with my money and get reimbursed by the bank because I could wait. But if you're not in a position to have that money saved up, you're going to need a very, very willing and cooperative and capable contractor to be able to float the project himself. Sometimes contractors who work heavily with 203k loans will be familiar with it and able to deal with it, but in my experience, I would say most are not. So, the same will occur for each draw until you have completed the project and there's a final walkthrough. Now, there's usually also a contingency amount that's like, surplus above what was bid. Now, that surplus, can be kicked back to you, or it could go and get refunded against your principal for the property. So it really depends. That surplus, you could say, hey, you know what, it needs to be used for, appliances, for instance. We didn't include appliances into our bid, and now we realize that we're going to want to update these appliances. Or, you could say that the budget ran more than what was expected, and then you can make whatever upgrades you want, purchase furniture maybe, with that additional money. So you're going to want to kind of have a plan for that contingency reserve if it didn't get used for the project. You may run into an issue where you didn't know that you had termite damage, or you didn't know some of the plumbing was broken, and the contingency reserve will match that amount, okay, and cover that. But if you were able to walk away with just getting it done as bid, and you have that contingency reserve floating around there, you need to decide how you want to use it for your home, or do you want to just levy it against your loan principal. And now this is what my experience was 10 years ago. I'm not sure how much the process has changed, but I'm pretty sure it's just about the same. If you guys have any questions for me regarding some of the details within your own process, or some of the details, or you want more details of what I spoke about here in this video, of course you could leave that in the comment section below. If you're not already a subscriber, now's that time. Hit that subscription button down below. Turn on the notifications bell so you get alerted of when I do new videos. And don't forget to like and definitely share this video. As I always say, if you share this video, you're going to be putting it out there to your community that you're looking to invest in a home. You're looking to do a 203k loan. You're looking to do whatever. And the contractors in your social circle, the friends that may have a contractor, you may have a friend whose boyfriend is a contractor and contacts you to say, wow, I have a boyfriend who's a contractor. Maybe you might want to meet him when it's time to do this project. By you sharing what you're doing, you're going to get tons and tons of inquiries and support from people who are interested as well, or provide supportive services. So make sure you're sharing these videos as you see them. Put it out there that this is something that you're interested in, and I guarantee you, you're going to get some assistance support for whatever it is that you're doing in real estate. Once again, thank you for joining me at ENTP Life. I hope you've enjoyed this video. Any questions, leave them below. Take care.